right, moving on then from Deepak Nitrite to NTPC. Akshay, NTPC again a counter that a lot of techies are keeping on their radar. Tell us, what are you seeing on the charts for this one? Last 1 month it has given some good moves of 9-odd%. You see a breakout on the charts for this?
Yes, absolutely. If you look at the price structure, with all the kind of volatility we are noting across the market, this stock somewhere has held its ground around the levels of 340, 350. And after a sideways consolidation, it has come back very strongly on an intraday note. So a base of 345, 350 is set on the technical price charts. And the way this stock is setting up, possibly 375, 380 would be your short-term targets you can look forward to. So consider this as a good trading opportunity. In the power sector, this stock has an excellent setup and would recommend to buy NTPC with stop loss at 342 for a potential target of 385 to 390.
All right, that's on the chart, a bullish call coming in on NTPC. But moving on to another on the chart, a bullish call coming in on NTPC. But moving on to another counter that is doing very well for itself, and that is SRF, which is trading with gains of almost more than 6%. It's up almost 7% now. The company has commissioned and capitalized a new facility for producing an agrochemical intermediate at Dahej in Gujarat, and this has been done at a cost of 235 crores. On the back of this capacity expansion, SRF is up and away 7% in trade.
Okay, looking good for SRF as well today. Ravinder, you've picked out an earnings candidate for us, TCS. Well, the numbers were slightly below street estimates and the stock has been flopping in the red and the green both sides today. So it's not been doing all that much. But tell us what the street verdict is and tell us what brokerages are saying.
Well, as TCS has reported its Q4 FY25 number, and the company's revenue saw a uptick of 0.8% quarter-on-quarter basis at rupees 64,479 crore in Q4 FY25. However, the profitability declined slightly with PAT down 1.3% quarter-on-quarter basis, and EBIT was also down by 0.4%. The EBIT margin slipped by 28 basis points to 24.2%, and in dollar terms, revenue stood at $7,465 million, which was down 1% quarter-on-quarter basis, and TCS has crossed the $30 billion annual revenue mark for the first time, marking a significant milestone. And if we talk about segment highlight in Q4 FY25, then the communication and media reported a degrowth of 9.8% year-on-year basis in constant currency, while life science and healthcare also reported a degrowth of 5.6% year-on-year basis. If we talk about geographical performance, then the North America registered a degrowth of 1.9% year-on-year basis in constant currency term, and Asia Pacific reported a growth of 6.4%. And there are also some brokerage note coming in on TCS where Citi has maintained a sell rating, but they have cut the target price to rupees 3,000, and UBS retained a buy call with target price of rupees 4,250 per share.
Okay, so that's the take on TCS and what the street has to make out of these numbers. But once again, just quickly drawing your attention to the bottom of the screen, we have more flashes coming in based on what Chinese authorities are saying, and agencies tell us that China says that US should bear responsibility for tariff damages. China says US tariff is economically meaningless, and China says that they no longer make economic sense